What's up, homie? D'Angelo here with Macro Freedom. Today we're asking if the US economy is already in a recession. Turn on the news and you'll hear, what if there's a recession? Will there be a recession? What could cause a recession? But I think they're all wrong because I think we're already in a recession. Let me know your thoughts in the comments. Now let's keep it simple for the so-called experts and the so-called news. Here's the definition of recession. A period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP for 2 successive quarters. Heck, you could even read that as blah 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 blah, a fall in GDP for 2 successive or consecutive quarters. Because guess what? The first quarter GDP for 2022 came out in April at negative 1.5. Well, that's halfway there. And the second quarter just wrapped up, so we're not going to have the official GDP numbers until July 28th. And remember that date, by the way, because that's when the media might have to admit that we are, in fact, in a recession. But we do have some pretty accurate predictions from the Atlanta Fed itself, and hopefully they're promising, nope, second quarter GDP prediction, again, negative 1.5. Now, the Atlanta Fed is accurate, but in the first quarter, they overpredicted. So whatever they say, it might actually come out to be a little bit less. Now, last time I checked the math, the second quarter comes consecutively right after the first quarter. And they're both going to have negative GDP. I think that means, oh, Daisy, we're in a recession. Lordy, lordy. Do you see how difficult that was to figure out? Definitions are hard. Now, we could have been hopeful that the negative GDP in the first quarter was just a fluke. But as this post predicted on June 16th, we are in a recession and the economy is in bad shape all the way around. Be sure to subscribe for a full video as to why the recession is happening, but I can break it down in a nutshell right now. The crazy rise in inflation and gas prices, which were both caused by the government, is causing people to spend less money and buy less because simply there's way too much month at the end of their money. The result then is liquidation. People selling their stocks and crypto for a little extra cash, a little extra spending money throughout the month. The market then goes down, people start getting margin calls and have to sell even more stocks and crypto just to cover their margins. And the markets go down and down and down. Mixed with less consumer spending and rising interest rates from the Fed, it's a recipe for disaster. Also, we're seeing one of the craziest yield curve inversions ever right now. And a yield curve inversion has been a key indicator of a recession accurately time after time after time. And nobody talks about this, but the US bond market for the first half of 2022 has had its worst performance since 1788. Okay, that's before George Washington was inaugurated. And here we are. But what happens next when blue collar Bob is out of stocks and crypto to dump for a little extra cash? What happens when prices keep rising as companies begin layoffs? What happens when millions of Americans can no longer afford to make their car note or mortgage payment? We've been there before, but this time the Fed can't wave its magic wand by lowering rates and printing more money to save us because that's what got us into this inflationary mess and recession to begin with. But we'll be having plenty of videos coming out explaining all of that. For now, just save as much money as you can and keep working hard through this recession. If you agree or disagree or have any opinions or thoughts about what I spoke about, please feel free to put them in the comments below. Again, my name is D'Angelo with Macro Freedom. We follow the global economy and fight for freedom in your finances all around the world. And don't forget to like the video, share the video, make sure to follow Macro Freedom and D'Angelo Caesar. Thank you.